Anand Tandon is standing by. Hi, Anand. Good afternoon. Well, we had Shree Cement that delivered disappointing numbers on the weekend, and one thought those are disappointing. Then we had to look at ACCA. Only 20-30 rupees of EBITDA per ton number is what you got. And even Heidelberg Cement didn't deliver a great set of numbers. The good part is everyone's looking at a better second half of the year. How would you approach this space? And if you're getting Ultratech Cement 25% low in comparison to a year ago, will that be your bet?
Well, you are getting into the high season now for cement. We've just had a monsoon which has got over. Of course, it's been extended in some parts of the country, but despite that, this is now the time when construction activity would pick up. So seasonally, it is a good time. And therefore, the next 2 quarters are likely to deliver better results. So if you're looking for better realizations and perhaps to some extent better margins, given the fact that the costs have also been coming down, you would expect that the second half would be better in general. But that said, I think, from a cycle point of view, cement is not that very well placed. We've discussed this already earlier, that you have a new player who's a lot more aggressive, but also because of the fact that Shree Cement has a change at the managing director level, you are likely to see some aggression coming in there as well. So you are going to see a more competitive scenario. The demand may be a little higher, but I don't think that the capex cycle, it shows some signs of sputtering. And if that were to become the more dominant feature, then that will be a problem as well. So from a valuation perspective, I think it still remains a little toppish despite the kind of correction that you mentioned.
That's the call coming in on cement. Anand is not a big fan. Anand, what about Zee Entertainment? The decks are all getting cleared for the merger with Zee and Sony. And everyone, all the analysts we've spoken to say that there are great synergies to be realized post the merger, sports, OTT, etc. But the stock has struggled. And there is that big worry about the future of broadcast in a way. How would you approach Zee Entertainment? And is that a stock that you like?
Well, I think there is a greater chance that you're likely to make good money on Zee compared to many other sectors, largely because the fact, as you mentioned, there is no question there is great synergy. But when I'm saying synergy, it's not so much about reduction in cost, but the kind of complementarity that exists in the product bouquets, whether it is the fact that Sony has a better sports presence, or the fact that Zee has many more regional channels which are leaders in their field. Overall, the kind of presence that they will be able to offer to any advertiser makes them a very powerful entity to deal with. And again, the fact that CCI is having to take a view on the merger itself tells you the kind of market clout they will have. Now the question remains whether or not the overall cost of production goes up, because that's one of the problems that many of the professionally run companies face. But I think that overall, in the grand scheme of things, despite OTT, despite the fact that there is fragmentation in the media industry, a dominant player like Zee Sony merged entity is likely to do well. I can't see too many scenarios where they are going to suffer.
It's a pretty good day for broader markets as well. We've been focused on the index, but the breadth of the move is quite amazing. BHEL we've spoken about. Canara Bank is up 5.5%. It is the top gainer in the PSU bank space. There is Data Patterns, which is up 9.5%. Electronics Mart, the recent listing from yesterday, that is up 10%. It's limit up, by the way. Gujarat Alkali is up 6%. By the way, all of these got huge volumes. Even a dud like NHPC, I think there was a CLSA note a few weeks ago, that is up 7.5%. It's a hydro power generator. Karur Vaisya is basically coming back above 90 levels. I'm not mentioning PSU banks, but there are a lot. Jayaprakash Associates is up 10. It's limit up 10% in trade. J&K Bank, DCW, Midhani, and all of them decent sized volumes. Phoenix Limited is another one, the sort of mall player, 6% higher at about 14.27. So it's a pretty broad-based move with lots and lots of action across the board. Any thoughts, Anand, on the PSU bank space? I think I know where you stand in the space, but let me put that in any case to you. 7.5% on the index, by the way, 2 days, second day running now.
Well, before I come to that, I would like to react to the dud that you mentioned of NHPC, since that happens to be one of my more favored investments at this stage.
Oh, no.
No. The reality is that, the kind of growth that you are likely to see over the next 5 to 10 years in this space I don't think it's been factored in yet. I mean, you are looking at a couple of very large projects coming on stream over the next couple of years. Don't forget there is now a huge premium on renewable energy, and this is one of the most stable forms of energy. And within that space itself, there was an earlier problem of trying to have land acquisition. Today, from what I understand, the situation is such that some of the northeastern areas, many of their premier projects, the people are asking for their houses to be drowned because the compensation levels are so high. So overall, I think I'd be very surprised if you don't see over the decade or so the capacity actually doubling almost. And with the kind of utility it is, if without adding any value for the fact that it is renewable, it's not trading very expensive. So I think you will get serious growth from here on. Coming back to your PSU banks, I have mentioned that always in the past. For now they are in the NPA accumulation phase. In other words, they are at a stage where they've just cleaned up their balance sheet and they are now going to have to lend. Credit growth has picked up big time, and many of them do have therefore balance sheets which are able to extend. We are still in a interest rate rising cycle, which will help the NII coming through. So net for all banks, it's going to do well. Only caution I think one should exercise at this stage is to see whether they also have reasonable deposit franchises, because with the kind of difference between the credit and deposit growths, you will very soon need to have the ability to raise cheap deposit funds, and that can be an issue. Nothing to do with PSUs. I don't know how many people have actually seen the fact that RBI has put out a concept note on e-currencies. Of course, for now it is not likely to have any major impact, and also they're going to go slowly. But potentially that has the ability to disrupt banking as a whole. But that's for a very long term kind of time.